Welcome back. Hope you're having a good morning as we get into Christmas week. So get done with Friday and then we get into Christmas week. But we have markets to talk about and we just listed all the stocks for you. Let's get some fundamental analysis going. Siddhartha Khemka, Head Retail Research at Motilal Oswal, joins us on the show. Hi, Sid. Morning. Thanks so much for joining in. Well, let's talk about the top stock that we just discussed, Siemens. It's had a good run so far. They had an analyst meet. What are you making of it at these levels?
Yeah, very good morning, Nigel, and wishing you all the CNBC members and the viewers in advance very happy Christmas and New Year. So I think we had a very good update from Siemens. The management highlighted the growth opportunities across segments, plus its plans to demerge the energy division and increase the localization across segments. If you look at what has been happening in the overall capital goods space is that there has been a good recovery across segments, mainly driven by the government initiatives towards incremental capex spending, also supported by the private cycle, especially led by the PLI-led schemes that has been leading to higher capex. And if you look at Siemens specifically, they have been benefiting because their exposure towards the core industrials to the government spending side is much higher. Look at the sectors like the railways, the locomotives, where they have then automation is another space where they have very high penetration, and that helps them improve the overall order visibility. So locomotives, metro order inflows have been pretty strong. Apart from that, the recent development that has happened with regards to the cabinet trying to emerge the energy business, that has been taken positively by the market. So we believe that overall that should lead to a value unlocking over the next 2-3 years. And we believe that the company continues to do well. Our estimates currently stands at a revenue CAGR of 16% and a PAT CAGR of 19%. And being a market leader with the best technology in that space, we are positive on the company. We have upgraded our target price marginally to 4,600 and continue to have a buy rating.
All right, that's on Siemens. Siddharth, hi, good morning. I wanted your thoughts on Varun Beverages. After the rally that we've seen, do you think it still makes sense to buy the stock? I'm asking because, you know, both on, when we spoke to Ravikant Jaipuria yesterday, both on Varun Beverages and on Devyani International, there are big expansion plans that the company is looking at in the domestic as well as the international market. So for someone who's bullish on these names, does it make sense to add on?
Yeah, Sonia, I think, first of all, very good morning. So I think we have been very positive on Varun Beverages for quite some time. The company has been delivering the kind of growth the market is expecting. And the recent acquisition that they're doing, plus the penetration in the food segment, these are all leading to the high growth. Right now, we have not baked in the newer acquisition that they have done. So the numbers, based on our past numbers, the valuations definitely look a bit on the higher side. So our target price was about 1,090, around 1,100, which is where the stock price has reached and crossed. So I think we would definitely look to upgrade the target price post the acquisition in the South Africa, which is a very high growth segment and should lead to further re-rating. As you rightly said, stock has moved up. But the core story remains strong. So I would suggest that any dips or declines in the stock should be taken an opportunity to accumulate. We have seen markets correcting on back of a lot of other factors like yesterday. So those are the days when you should look to add on to stocks like a Varun Beverage.
So that's a very interesting moves here, right? V-Mart retail is actually down 30% this year. It's been a big underperformer. But some of these companies like Trend have been doing very well because of the, you know, fresh brands that they've launched like Zudio. What do you do here? Which are the stocks that you pick?
Yeah, Sonia. So I think very clearly what the management highlighted is what is happening within the overall retail space. Quite clearly, there is a demarcation in terms of the high growth and the focus companies which are doing well both in terms of growth and margins. Revenue, so Q2, what we saw that the aggregate revenue for our coverage of retail companies grew about 14% and mainly driven by footprint additions. We also heard the management about the good recovery that we saw this time around the festive season, and which is where Q3 numbers would be much better and we see improvement. That is where the recovery lies in. Margin profile has remained weak, and that has been a major point of the expectation that things to improve from here. Margins have to overall improve. EBITDA margins for our overall aggregate contracted by 100 basis points. And as I said, a demand pickup in Q3 with stable raw material prices should look at a better H2 in terms of margins. Trends EBITDA margins have somehow outperformed with an improvement of 120 basis points, and that has been supported by a strong growth. So I think overall we are expecting demand to be much better in H2 with the festive season already gone by, and we have had commentaries and seen on ground how things have been much better. In terms of our top picks, Trent, Metro Brands, and Titan within the overall retail space are our preferred picks. If you look at if I were to include the broader retail, including jewelries as well.